Hello traders, Cousin Vinny coming to you from theclosingprint.com, April 24th, 2022. In this edition of your weekend video newsletter, we'll discuss the markets and the current sell-off as most growth stocks are beat up and few stocks are showing relative strength. We're starting off the week with 17 bearish indicators. That's an extreme level. 1 neutral and 2 bullish. S&P 500 supports at 4,000. That's about 300 points lower. And resistance at 4450, which is the current level of the vol trigger, with the put wall shifting lower last week. You'll note there's very few stocks on the list that we're watching. We did see some stocks showing relative strength last week at highs, in addition to some potential strength in REITs due to their inflation protection. Bottom line, the markets are very weak. I would tread with caution going into the last week of April. The Dow Jones Industrials dropped 1,000 points on Friday, and assuming a potential test of recent lows that were set on February 24th, approximately 15 to 1,600 points lower, as the Fed is in the midst of raising rates to quell inflation. The S&P 500 fared about the same. Both were off more than 2.75%, with the S&P also with a potential test of that February 24th low. So we're looking for more downside this week. If we get a bounce, that's great. It'll be an opportunity to sell more into strength and to reduce our risk. The Nasdaq 100 remains the weakest index, of course. We have the Qs off nearly 4%. What looks like a rounding top or a head and shoulders top. Looking for more weakness as growth stocks succumb to higher interest rates and higher yields. We're now watching the 382 Fibonacci and 50% Fibonacci's from the February March lows back in 2020 up to the recent highs in November of last year. At that point, RSI would be oversold, looking for a turn to the upside. If that resulting weakness continues, we'll hold on to our hedges in QID. I'm up to 600 shares now and would more than likely add this week. If for some reason the markets manage a bounce, I'll probably take those QID shares off, though I'm not assuming that we're going to see a big bounce to start the week. Small caps are also giving us reason to be very cautious. On this weekly time frame, you can see that we have a 382 Fibonacci just below at around 186, and then 50% would be the retracement back to the breakout level that we saw back in 2020. Another reason to be cautious, as all 9 sectors are bearish, saw selling last week in small caps. All of our indicators as well are mostly bearish. We can see growth and value both selling off on Thursday and Friday. The S&P Equal Weight Index also gave us a bearish signal on Thursday and Friday after the Fed spoke, headed towards a potential bounce in the short term. So I'm thinking we're going to retest these lows again. Breadth continues to sell off. The advanced decline percent for the S&P 500, mid caps, small caps, and Nasdaq are all headed towards minus 30. That's usually an area where we start to see a potential bounce. So I'm thinking quick retest of the February 24th lows. We'll get oversold. Maybe we have a chance for a bounce. I also talked about valuations last week, and over the last few months we've seen valuations coming in, dropping below the red line. As we can see, these troughs lead to reversals at some point. Something we'll be looking forward to as multiples continue to contract in this current drawdown. We're also watching for the bullish percent to change. We need to see a change in direction here as well, a reversal or a V-shape as the number of bears continues to increase, looking for a washout low in the coming weeks as we look for a retest of that February 24th in the short term. The one caveat, of course, and bullish indicator that we have this week is the put-call ratio. You can see it's in the extreme green zone. That tends to lead to market reversals in the past. And for those of you who are trading VIX to the long side, the orange line has a potential to moving up to the blue line, which is the bond market volatility estimate back in February, March of 2020. These levels moved to the extremes. There's a possibility VIX might see the same thing going into the next couple of weeks and potentially testing those February 24th lows. Bottom line, we're trading with caution. Any bounces, I'm looking for opportunities to take risk off and continue positioning defensively. The US dollar remains one of the safety trades that continues to rise, with the dollar over the 100 mark, which creates pressure on commodities that are sold in US dollars. Yields also continue rising, with the 2s and the 10s, the 10 in red, separated by 18 basis points. At the same time, we've seen the German Treasury yield move to the positive side for the first time since 2019, when yields went negative. We're starting to see 1% on the German 10-year Bund yield, while junk bonds and high-yield corporate debt continue their move lower. We need to see a bounce. If you're bullish equities, you want to see junk and high-yield corporate bouncing at this level. You don't want to see a fall off like we did back in 2020, when this gave us a very bearish signal for equities. Additional bearish signals with the US dollar rising to new highs. That's putting pressure on commodities priced in US dollars. Gold is moving lower, along with silver. So the one safety trade appears to be the US dollar with its persistent bullish trend. The sector heat map is decidedly red as more sectors sell off. We're also looking at the international markets. Most of them are bearish as well. If you're bullish equities, you want to see these lines moving higher, not lower. This is consumer discretionary versus consumer staples. When this line is dropping, it's telling you to invest in defensive stocks like XLP, XLU, XLV. Biotechs continue to show weakness. Real estate is above a bullish 9 and 21 day. We're looking for some of the REITs that we have in the opening monologue to move higher. Transports pulling back, very weak, below the 9, 21, and 50 day, descending moving averages. Materials selling off last week with news out of Freeport-McMoRan and comments made during the conference call. Those stocks like Freeport and Alcoa sold off. Communications, thanks to weakness in Netflix, Roku, Facebook, all of those moving lower. With Facebook earnings coming out, looks like institutions are reducing exposure to Facebook, with Facebook reporting on April 27th after the close. Energy managing to hold on to a bullish trend, looking for a retest of that 74 zone. Maybe we get a bounce there at the 50-day. Financials pulling back, along with industrials, which have lost their 50-day moving average, looking for a retest of that February 24th low in many of these sectors. Technology headed towards those February-March lows. Consumer staples even saw a little bit of selling on Friday as people seem to be more fearful at the present time, looking for a bounce at the 9 or the 21 day, along with utilities, which moved through the 21 day. So it looks like the most logical level now is the 50 day, back at this breakout level. Weakness in utilities as well, a defensive sector, on above average volume on Friday. And healthcare selling off markedly on Friday with no place to hide. Here's consumer discretionary. We're looking for that to hold this level or drop back towards the February-March lows. Bottom line, we're seeing all sectors with indiscriminate selling, with some sectors holding up better, like consumer staples. This week we'll be looking for some relative strength to continue in real estate stocks. Here's IYR moving back above the 921 and then the 50-day in late March. We're looking for stocks like American Campus Communities to continue higher. It's a REIT that owns and manages, develops student housing, properties within close proximity to colleges and universities. We can see relative strength line is at 95. Reporting earnings tomorrow after the close. That'll be interesting to see how these REITs perform. Apple Hospitality REIT reports the first week of May. Note sales and earnings a 41% increase estimated for the year, with an additional 22% in 2023. Claros Mortgage Trust, the company continues to see follow-through, breaking out above its pivot in recent days with decent earnings and relative strength line climbing. Digital Realty Trust with earnings this week. EPR Properties, a REIT that holds 175 theaters with a total of 11.88 million square feet operated in 40 states. Relative strength line climbing, earnings are increasing, reporting the first week of May. As people go back to work, corporate office properties, REIT also looking good. OFC earnings dropped a little bit for 2022, looking for that to start to increase again in 2023. The company acquires, manages, and develops suburban office properties, primarily in the Mid-Atlantic region. Relative strength line is climbing, with the company reporting after the close on Thursday. Sunstone Hotel Investors, a REIT that buys and owns, renovates primarily full-service hotels in 8 states. We've got earnings increasing to a profit in 2021. Again, 22 and 23, we're starting to see earnings increasing. Relative strength line is climbing, building the right side of a cup. Company reports in the first week of May. Looking for a follow-through in many of these REITs to start the week. Additional stocks that held up last week, we're looking for a follow-through in Clorox and some of the consumer staples names, like Kimberly-Clark, which was up nearly 10% last week, starting off on Tuesday, following through Wednesday, Thursday, and then gapping up on Friday on above average volume. United Airlines also up more than 10% last week. Upbeat guidance and good earnings from the company, with revenue growing 134% year over year. CEO mentioned that they were back to 90% of the pre-COVID levels, as many airlines see an increase in travel bookings. In addition, we saw strength in the discount retailers. Target was up nearly 5% before we saw profit taking. We're looking for many of these to continue once we see buyers stepping up and a potential resumption in the consumer staples trade this week. Okay, traders, that's going to do it for me. This is Cousin Vinny coming to you from theclosingprint.com, April 24th, 2022. This video is much shorter than usual. The bottom line is that we're looking for more caution and a potential retest of the February 24th lows across multiple indices. A reason for us to be more cautious, take risk off, and hedge accordingly. I'll send out a watch list later tonight around 12 midnight on the East Coast, around 9 o'clock on the West Coast. Look for that in your inbox later tonight. Otherwise, have a great weekend, what's left of it, and we'll see you in the morning. Take care.